Welcome back. You're still tuned into your stocks. We were looking at M&M's numbers before the break, which, like we were pointing out, look pretty much in line, maybe just a tad lower. The margin has come in at around 12.4%. This is versus the estimate that we had of 13.1%, but the stock is absolutely flat. By the way, Shahina, do you look at the M&M stock as well? And what do you think of this? Do you think at current levels it is something that you would recommend?
Well, see, valuations are not expensive, though the stock has run up a lot. At the same time, I think the tractor division and how it performs in the next 2 quarters, especially given the way that the monsoons may not be or may be below par. So that will actually see that the stock may remain in a consolidation phase, in my view, over the next 1 to 2 quarters. And then depending on the, monsoons and how the business picks up, I think the stock could give its move upward from there. But valuations are not expensive. So for a long-term holder, I think one can continue holding.
Okay, that is on M&M. But let's get back to our queries now. Like I was pointing out, the first query is on Hindalco. Shalini Jain, she has 50 shares of Hindalco at 300 rupees a piece. She says she's a long-term investor and wants to know what she should do with this one. So she is making money on this. She bought at 300. Hindalco is currently over 400, 413. Kush, coming to you on the technicals first, how is it looking for Hindalco?
Actually profit and is rebounding from
audio. Unfortunately, there's something wrong with that audio, so the team is going to try and fix that. Shahina, coming to you in the meantime, we saw the earnings a few days ago from Hindalco. It's looking like a good performance. The stock, however, didn't react so well. What do you think about Hindalco from a longer term perspective? The buy price is also pretty good at 300.
Yeah, Pavitra, I think the numbers were more or less in line, but some of the analysts have marginally brought down their estimates for 1 year forward. Having said that, I think valuations at current levels are pretty attractive. On a PE basis, it's single digit. Even if you see on an EV by EBITDA, 1 year forward is just about 6 times. So I don't see any major dip from here on. And for, even the debt was lower. While, of course, you can attribute it to Novalis bringing down their working capital, I think the trajectory for debt is also lower. Things are looking good for the medium to longer term. So I would recommend that the investor continues holding, especially that she's got it at a good price.
Okay, got that. So Hindalco is, perhaps good for considering the current price as well and considering the buy price, which is at 300 as well. Kush, how is this one looking on the technicals?
Well, not too bad. In fact, and the good thing is that the price at which she's bought in has actually been the low of the recent fall, and the stock's reviving from there. If I look at monthly charts, the stock is in a very clear, uptrend. So for me too, as Shahina just said, it will be, a definite hold. What I would suggest is a trailing stop loss, at about 380 levels. That means if the stock falls, she'll still be in a profit. The stock could very easily move to 500, 540 levels in the coming months.
Okay, got that. So that is on Hindalco. But we have lots more queries coming in as well. So I'm going to try and get to those as well. Vandana writes to us from Kolkata. She holds 15 shares of Hindustan Unilever HUL at 1875. So once again, making money over there. And she also has 50 shares of Imami, which she bought at 175. She's a medium-term investor and wants to know from this kind of time horizon, what should she do? Should she book profits or should she hold for a little bit longer? Shahina, making money on both of these. HUL currently over 2,600 and Imami also, she is, making good money. She bought it 175. It's over 390. Do you think from a medium-term perspective, it makes sense to hold this, or would you suggest booking profits and getting out?
Even from medium-term perspective, it makes sense to continue holding. We saw HUL, actually consolidating for quite a bit, like a year. And from now, the results were good, actually. And it's showing some momentum. It's gaining market share that we saw in its numbers. Valuations have always remained expensive, but it looks decent even at current levels for medium term. And Imami, if you compare, the profits optically look lower, but if you excluded the tax on a YOY basis in the previous quarter, the tax adjustment, numbers were pretty healthy. And Imami, mid-cap FMCG valuations are pretty attractive. So I would recommend continue to hold both.
Okay, continue to hold both Imami as well as HUL. Kush, is that something you agree with? I mean, that entire FMCG piece has been rallying, right? The index itself has hit a high for the month. It's up over 5%. Do you think both of these are good to hold and keep in your portfolio?
Well, broadly speaking, yes. The only change that I would suggest is, a book partially in Imami. The reason being that the stock has actually come off the highs of 600, and I can understand, even though she's in a profit, the notional, loss, so to speak, that she would be seeing, seeing the stock fall from 600 to about 400 odd levels. Plus, it's gone in a sideways zone. So my suggestion would be partially book Imami at these levels, about 50% of the quantity. Hold the rest. HUL, it's a very clear, hold on this one as well. I won't be surprised to see 2800 and 2950 levels on this one, in the coming months.
Okay, that is on HUL. By the way, InfoEdge's numbers flashing on your screen. Revenue, very tepid growth over there, 564 crores as well. And EBITDA, like you can see, some of the numbers on your screen, Reema, looking quite soft over there.
Yes, indeed. So these are weak numbers. So InfoEdge gets about 80% of its revenues from the Naukri business, which is basically your recruitment. And in that, majority of the revenues comes in from the IT vertical. And IT hiring has come to a standstill. And this has been happening for the last few quarters, which is why InfoEdge's revenues have been slowly coming down. Just to give some sense about, the kind of growth rates that we've seen for a Naukri. Now, this quarter, the year-on-year revenue growth is about 24%. In the prior quarter, it was 33%. The quarter before that was 51%. Yeah. Before that was 60%. So in a nutshell, the growth rates for the company have been coming down because 80% of their revenues comes from Naukri, where IT hiring has been weak. The good part is X of that. The domestic economy sectors have actually seen a pickup in hiring. But the question is, because IT has such a large weightage on the overall hiring pool for Naukri, that it's not able to pull in the overall loss that they're seeing on account of IT. So even Naukri's revenues have been coming down. It's still good. It's still 27% higher on a year-on-year basis. Right. But this is a company where Naukri's revenues used to be like 50, 60% year-on-year growth during the heydays of IT. So that explains, the top line. The generally growth rate for the company has been coming down. On the margin front, the company has held on to its margins. So they are focusing on protecting their margins despite the revenues coming down. And this is something that the street appreciates. Because typically what happens when your revenues get impacted, it hurts your margins. But the company has been holding on to its margins. So this quarter, 39% EBITDA margin. Even in Q3, EBITDA margins were 39%. So despite slowing revenue, the company has been holding on to its margins. And I think that is something that's getting reflected. It also has three other verticals. One is 99 acres, which is the real estate portal. Now that is loss-making, but the company is very confident about things turning around because they have a pretty good market share. The other two are small. One is Shiksha, and the other one is which focuses on education. And the fourth one is Jeevan Sathi. Only in Jeevan Sathi, the company has been making losses. The revenues have been falling. Over there, the company changed the strategy. They're saying, let's go with a freemium model, which basically means initially, at least, our offerings will be free. Then if you want some premium thing over there, you have to start paying. And that, according to the company, has helped in gaining some users and traction. But at the bottom line, Jeevan Sathi is still making losses for the company, though Shiksha is EBITDA positive. 99 acres is an EBITDA loss right now. And Naukri is good, it's just not the strong growth rates of last year.
All right, thanks for taking us through that complete picture on what, the earnings have looked like for InfoEdge. In fact, we will be speaking with the management also in just a bit. So we're trying to, in fact, connect with them. And as soon as we can have the management on board, it'll be nice to have that chat going. But let's get you another query in the meantime. We have Jayanti Chaudhary, who writes in from Rajasthan. She holds 70 shares of Thyrocare Technologies purchased at around 1377. She's a medium-term investor and wants to know whether she should hold or sell this stock. Shahina, coming to you on Thyrocare, what is the call over there? She bought it at 1377.
Yeah, it is closer. She bought it at closer to the high. That was at the time when, the group of, I think, PharmEasy, the platform pharmaceutical company, actually took stake. There was that M&A that happened in that company. After that, it's been a one-way fall. At current levels, I would, in fact, suggest to average because valuations have become extremely attractive. And, it's just about 4 times turnover. So I would recommend to hold and average.
Okay, hold and average. We have another query coming in, and in fact, the caller is on the line with us as well. Manjeet calls us from Chandigarh with a query, and she has investments in CEAT. Ms. Kaur, if you can hear me, please go ahead with your query.
Yeah, good afternoon, ma'am. I'm holding 34 shares of Seat Tires. and at approximate price of 500 rupees, At the current rate of 2000 plus, what is your take like? Should I hold on or quit?
Okay, first of all, congratulations on all the money made and the fact that you've been so patient. You've been able to see this kind of big gain.
I'm long-term investor.
So how much longer can you hold from here?
I can hold. I already hold shares for about 40, 50 years, I'm a senior citizen.
No.
Yeah.
No wonder you've made this kind of money then. Shahina, come in here. So she bought it at 500. CEAT currently trending over 2100. A lot of money made over there. But do you think she should still continue to hold?
Yeah, congratulations, ma'am. Good investment. I would suggest you continue holding, being a long-term investor. The numbers were good, of course, which they reported, given that raw material prices had come down. They have got good plans in terms of new products, expansion. So I would recommend for a long-term holder, continue to hold. You may see some bit of correction because of the sharp rally we saw in the last 1 month. But I think you can continue to hold.
Okay, continue to hold. By the way, these stocks have really been rallying hard in the past few days and weeks. Kush, I was looking at the chart for it. It's up over 12% in 5 days. If you take a look at even the 1 month kind of picture, it's seen a huge jump. Do you think this recent up move that we are seeing is going to continue and extend itself?
Very likely, because despite the kind of sharp up move, the stock is a little away from the overbought territories. So for the ma'am, at least for the caller, my suggestion, or the only thing I can offer right now is congratulations, the kind of holding period she's had and the kind of money she's made. But don't sell it. There is no need. Even as I said, after the recent up move, the stock is away from overbought territories. 2500 is something that the stock could hit, in the coming months' time. So yeah, hold on to CEAT.
All right, Ms. Kaur, I hope that helps you. Both of our guests agreeing that this is a great investment. You've made a lot of money on it, but please keep on holding because this one has done you well and it perhaps will continue to move from here as well, considering that you have a long-term view. We're going to wind down in this edition of Your Stocks with the news that the market is looking very solid. It's 175 points higher on the Nifty, so almost 1% higher there as we wind down. By the way, M&M absolutely flat. Info Edge has also come off the lows. Maybe like Rima was pointing out, appreciating the fact that they have been able to maintain their margins in spite of the little bit of volatility that we have seen on the revenue front. We'll wind down. You can always email us your queries and we will keep addressing them with our experts. Stay tuned. Closing bell comes up for the final hour of trade this week.